Today, I want to talk about three stocks I believe are set to soar around something you probably haven't thought of as a major market mover, and I'm talking about Pokemon. In 2026, Pokemon isn't just a thing. It's a global economic powerhouse celebrating its 30th anniversary, and it's set to send a few stocks absolutely soaring. And of course, I'm going to tell you which one I believe is easily the best right now. Hey, what's up, pattern traders? Tom here, America's #1 pattern trader, trying to help you make sense of these ever uncertain markets through rules-based pattern trading. Now, today, I'm looking at patterns around the Pokemon phenomenon. And if you're like me and you thought Pokemon peaked back in the 90s, think again. Yes, these cartoon monsters have been killing it on a global stage. But guess what? This year, 2026, marks the 30th anniversary of the original Red and Green games, and the Pokemon company is going all out. Now, this isn't just nostalgia. This is a meticulously planned market strategy. We're talking about a Super Bowl commercial just recently in prime time, lots of commercials all throughout the Olympics, and a year-long campaign of day out and night out events catering to all generations. Now, currently, Pokemon is the highest grossing media franchise in human history, valued at over $100 billion. That beats names like Star Wars, Mickey Mouse, you name it. So how does this translate into your portfolio? Let's start with the obvious. Nintendo. This is an ADR full of shares and stocks that trade on the over-the-counter market. And the most common way to trade Nintendo is in the US. It's with an American depository receipt, or the ADR, where one unit typically represents either an eighth or a quarter of the original share. Now, it offers higher liquidity, makes it easy to buy and sell. Looking at Nintendo's chart, it's been a volatile last year, dropping about 45% from its late 2025 highs, and it's down about 25% year over year. But this is where savvy investors see opportunity. Nintendo recently raised its earnings guidance, projecting a 93% increase in revenue for the fiscal year ending March 2026, largely driven by the Nintendo Switch 2's momentum. Now, here's the kicker. On March 5th, not long after Pokemon Day, the highly anticipated sandbox games are going to launch. Now, think about this like Minecraft meets Pokemon. This is being seen as a major stress test for the Switch 2's long-term software attachment. And if it breaks sales records, which I expect it's going to, then we could see Nintendo rebound strongly towards the $16, $17 range in March. But with this and long-term sales expected to climb, this could be a longer-term value play. For all of you owners and long players out there, think Nintendo ADRs, all right? But what about pattern traders? Well, I looked at three stocks that should directly benefit from the Pokemon explosion. And there's one that is a buy on my radar right now. Now, these are ancillary plays. They capitalize on the franchise's massive retail and licensing power. First up, GameStop, GME. Now, love it or hate it, GameStop is still a powerhouse for the Pokemon trading card game. Now, they're hosting exclusive Pokemon Day 2026 collection events right now. So collectors will rush in for these limited edition cards. GameStop's traffic and their collectibles revenue get a direct boost. Now, one thing that needs a boost is GameStop's stock chart. Take a look at this chart. You'll see it's basically been in a long sideways pattern. What about seasonal breakouts? Well, turns out there's none at all. This is not the time of year when GameStop goes higher. In fact, patterns lean down for GME as traders sell the news of the holiday sale. So let's move on. Next up, McDonald's. These guys got their greasy little hands in everything, Pokemon included. The Golden Arches are recurring Pokemon partners, and right now, their 30th anniversary Happy Meal promotion is live, featuring exclusive booster packs. Now, this isn't just about kids. Collectors are buying Happy Meals to get these cards. It's a guaranteed surge in Happy Meal sales and a guaranteed surge in revenue for McDonald's. Okay, let's look at the chart. McDonald's is hitting on all cylinders right now with new highs breaking daily. But when I look to the seasonals, we don't really start bullish patterns until about mid-March. Now, that's not saying McDonald's won't move higher. It's just that the seasonal pattern won't be kicking in right now. Final stop, and my favorite Pokemon pick heading into spring is Walmart. Now, Walmart has primary distribution channels for everything Pokemon, from games to toys to exclusive box sets. During these anniversary years, their collectible segments are seeing a significant increase in gobbling up. Collectors are literally tracking down truck deliveries to the stores for these new drops. Take a look at Walmart's chart. It's literally moving in a higher high, higher low pattern. Gets even better. It is a seasonal buy right now. In fact, a deeper dive shows that buying Walmart now and selling it just 2 months later has seen a 90% success rate over the last decade and average gains of over 5% on the stock price during that time. Here's the best part. If you're an options trader, a 5% return in Walmart can equal 100% or more if you know what you're doing when it comes to options. I like the May options that are close to the money, and I like spreading my risk, buying lower strike calls and selling higher strike calls as a spread. What do you think? Are you bullish on Pokemon? Let me know in the comments below. Also, don't forget to like the video, subscribe for more insights, and hit that notification bell so you don't miss our next breakdown. I'm Tom Gentile. See you next time.